Hello and good weekend to you. Hope everybody is safe and healthy out there. This is Doc Severson for the Ready Set Crypto Omnia newsletter market update for Sunday, the 29th of March. After a most extraordinary month that we've gone through, this really started back here around the 20th of February in the major markets, and we've seen just absolute destruction of trillions of dollars of wealth. And you can say all you want to about how trickle down does not work, but watch what happens when companies start going out of business. That is going to be a huge problem because we're going to have downstream disruptions for this for months, maybe even years to come. I think this is going to be difficult for this to V-bottom. So some publications have already said, hey, the bear market is already over because we dropped more than 20%, so we went bear on, and then now we've rallied 21% off the bottom, so we're back in a bull market. That is not how it works, folks. This is once again another example of why you need to keep out of the mainstream media. Even the stock media is propagating these notions like this. Apparently, the people that wrote that article have never been through a structural bear market before. This is just the beginning of a lot of fun. Now, with that said, I don't want to be so predisposed towards forward bear action that I completely am myopic to what's actually happening in the price. So I have kind of laid out three things in terms of like what would have to happen for the price to go up, what would have to happen for the price to go down, or could we see the price go in more of a sideways motion from here? And I'm not really looking at this from what's going to happen a year from now. I'm more looking at this from what's going to happen in the next 2 months or so, because I think that's really the frame of time that you need to go by for most of your trades. I've said before that I think this is going to be a trader's market for the next couple of years. This is going to be very difficult for buy and hold, although everybody out there sees what they want to see, right? If you see what you want to see, and if you want to see the market going back into a bull, then you're going to look at this and go, well, I'm just going to buy the dip with both hands. And who knows, maybe that's going to work out. But in the past, it has not worked out like that very well at all. We've gone into some very torturous price action that just gets everybody on the wrong side of the price. So first of all, we get bear markets to get everybody leaning long again, thinking that this is the last time they'll ever see a rally. And they get unceremoniously dumped off yet again. And this is where we get into kind of this maximum pessimism type of market where just nobody wants to be long. And then and only then can we get to the point where it's worthwhile to start picking at the bottom. This is truly where capitulation will hit. So a lot of people are asking me, hey, is this capitulation? Is this it? I don't know. I don't know, because again, there's three ways that this can move from here. And a lot of this depends on how quickly we flatten the curve, how quickly we can all get back to work, how quickly we can put this money. Everybody's like throwing dollar bills and euros at this thing. How quickly that the stimulus can actually be put to work. This is going to be useless if none of us can do anything. If we can't spend the money, then it's pointless to do so. Now, I've said this before over the last couple of weeks. Again, I start my analysis with the larger markets because that's where the action is. That's where the majority of the money is. And this is where the big swings are. And to some extent, we're going to have Bitcoin and other cryptocurrencies are going to be somewhat whipsawed by what's happening at larger markets. So it does pay for you to pay attention to what's happening in the larger markets. So Bitcoin has generally been the strongest. And what I've talked about lately is like, I do not like the patterns that I'm seeing on some of the other top 10, like Ethereum and Ripple, Litecoin, Bitcoin Cash has looked okay, but even that is starting to, these are all bear flags, folks. And this does not look all that terrific for a lot of these. So right now, the safe harbor still in the cryptocurrency world is going to be Bitcoin, with the exception of some interesting possibilities. Now, I've been bringing this one up to you guys again and again lately and saying, keep your eye on this guy. And then Go figure, on Saturday, this thing just blew up. I mean, so Hero is just going into this stair-stepping routine, breakout, consolidation, and we could start to see this if we throw on the RSI Laguerre. Look at the volume on here. The volume is the true key to what's going on. So price movement with volume really shows conviction to this. And so we're seeing this same pattern going over and over again with Hero. Again, if you don't know what Hero is, it's a gaming / binary options site. And maybe I'll boot this up for just a couple of minutes so you can see what this is about, whether or not you want to risk any capital on it. I've done some reports over the last year about what Hero is and my experience with it. And it's interesting because it will make you a better trader, because it makes you focus on reward to risk and not necessarily winning trades, which is what we all do. So maybe I'll spend some time on Hero tomorrow in tomorrow's report, show you what it is, see whether or not you're interested in it. But you have to pay attention to assets that are doing this kind of thing when in the rest of the market right now is just, obviously having problems. You've got one that's saying, I've got some potential revenue. I've got increasing business. This is something that's actually happening. And again, this is one of these examples where a cryptocurrency token has got a great business case for it. The rest of today's report I want to dedicate towards options, because I truly believe this is going to be the answer for the majority of people out there trading this market. Remember, I said this is going to be more than likely a trader's market going forward, not like it hasn't been for the last couple of years in cryptocurrency. It has been. This has been a trader's market for the last 2 years. Up, down, sideways, up, down, sideways. We're not getting really any linear trends. And so this does, once again, remind people, this is why I focus on being a trader, because I never know when these great big secular bull markets are going to explode forth like in 2017. You got to be lucky enough to be on at the bottom of them and not chasing up at the top like everybody else. So in the meantime, you can trade options with this. Now there's four different applications that I talk about in the options program. So if you haven't seen it yet, check out the options masterclass that we have in our catalog. So one of the first is more of just the speculator, the long speculator, buying a call option, buy low, sell high. Looks easy, is not. This is actually a fairly easy trade to understand because you're getting a leveraged instrument. So a lot more leverage than the spot. However, there's so many moving parts to this, like time decay and volatility crush, things like that, that this actually can be a very difficult way to consistently make money on swings. Now you can flip around and do the exact same thing. You can buy insurance, and this actually does work a little bit better. It has a couple more things going for it, but this is a long put option. And so this is a bearish trade where you think something's about to collapse, buy a put option, buy to open, sell to close. Everything works as normally. So this is the same thing as shorting the spot currency. However, fundamentally, it's a lot better to do so because it's a limited risk trade. So these are the two trades that just about everybody that's traded spot before, that's the first thing they learn about options is, oh, it's a derivative. It's a leveraged version of the underlying spot currency. And so for less money, I can make bigger gains. So obviously that's the big pro behind these options. However, the con is that it can be more difficult than that to make money with these just because of a lot of things that people don't understand about options. So now let's flip this on its side. And if you did go through the options masterclass, you'll know that I really focused on two additional strategies. One would be selling a put. So selling a put is where you sell to open, and what you're looking for is the price to go higher. It can go sideways. It doesn't really matter. Even it can continue to go a little bit lower on you, and you can still sell that put out of the money below the current price and allow it to expire. This is the business application of being an insurance company, right? You're collecting premium and your job is to keep it and not pay it back to the market. The other application is the sale of call options. And this is also, so this requires you to be like a landlord. You own an apartment building, and what you're doing is you're renting out those units to tenants. And so this is the case where you have to have a certain amount of Bitcoin. And what you're going to do is you're going to rent that out at prices above the current spot price. So you're going to sell that call option above the current price. And as long as the price stays below that strike price, you get to keep what you brought in. You get to keep that rent payment and you don't have to pay anything back. And you just keep doing that. So this is a way that you can rent out your current assets, your current Bitcoin, and earn income on them. So these are the two strategies that I think are probably fundamentally the best ones to use. And if you think about this, what you can do is simply start out with cash, sell puts, keep selling puts until finally you're assigned. And then once you're assigned, you've got Bitcoin that then you can rent out. And it depends on whether you want to keep it or not. That will depend on how aggressive you are at selling those calls. Okay, so that sounds great in theory. The problem is that right now with the number one options broker that's out there, these are cash settled options. So if you sell a put and if you lose the trade, then they just take cash from you. So if that's the strike price that you sell and if the price settles down there, they're going to take this delta times the number of contracts away from you, out of your account, and say, we're going to settle this through cash. There is a good ending to the story, though, because what I talked about in Friday's trade school was the option of physical settlement. Physical settlement means that you sell that put option down at this level, and if the price goes at or below that level, then they're going to assign you the physical asset, which in this case is Bitcoin. So this is a way for you to stack sats and get paid for the pullback. This to me is a great application for trading options. And this, I think, will allow you to trade the volatility in the near term, which is going to be tons of it. And then during that, you can stack Bitcoin. So if you are long-term bullish on Bitcoin, this is a way where you can do that. So yeah, again, the problem is with Deribit, there's two problems with Deribit. First of all, Deribit is cash settled, which by itself, again, that's not a big deal because what you can do is you can stack sats just by the trading profits because the currency that you're using is Bitcoin itself. So the trades, even though they show cash numbers on the trades, the currency that you have to supply is Bitcoin itself. So you have to fund your account in Bitcoin. So it's not a tremendous problem. It's just if you lose the trade, you end up getting it taken away from you instead of just getting assigned, which is what everybody wants to be anyway, right? You just want to be assigned and start to acquire and accumulate Bitcoin. Now, the second problem with Deribit is they basically said to us Yanks, we don't want you. We don't want you. We don't even want you coming in through a VPN. You know, in the past, we would just sort of like look away, but now we just don't want you at all. So they've made that clear. They're going to do KYC or they've already started it. I don't know. And so, you know, goodbye Deribit. So for those of you in the European Union or elsewhere in the world, terrific. Keep using Deribit. But what do us Americans, what are we going to do about something like this? Well, there's a couple of things that we can do. Now, you guys have heard for the last several months, or maybe the better half of the last year, that we've got companies like Bakkt and CME offering futures and options. That's great, but in the States, you can't get them by just going to that exchange. You have to go to your broker, and then hopefully your broker is working with that exchange to supply the options. So we know about the Bitcoin futures that came along back in 2017, of which the CME version is still out there. And those are the ones that are worth 5 Bitcoin apiece. So a big notional contract. And now what we're seeing is the CME, in this case, this is Thinkorswim, TD Ameritrade, is actually hooking up with the CME, and the CME is offering these options. The problem is, though, that the brokers themselves are being slow to offer them. So I can't even buy and sell these options yet, even though I requested access. So either they're stuffing my request onto the floor or they're just not offering it, and I have to reach out to them. But even then, this is a big contract, guys. You got to have a pretty big account to trade these. If you're trading a notional value on the contract of, let's just say 6,000 times 5, that's a $30,000 contract that you're leveraging the gains of. And so this is, these options on futures are big boy products, and these are not to be taken lightly. This is not for somebody that has no experience trading options, especially options on futures. So what can we do about this? Well, LedgerX is still out there. Now I did some work on LedgerX, talking about LedgerX sometime last year, and then they sort of fell off the cliff and they changed their management, and it made me kind of back away going, oh boy, here we go again. Well, they're still out there, and actually they've been doing some good work. And let me show you a couple of reasons why you might want to, especially if you're an American, if you might want to check this out. All right, first of all, it's a very simple interface. Very simple interface. So that's good and bad, because it's easy to drive. There's not much that you can do with it, but it's also really hard to screw up. And you can see that in the past, what I've complained about is if we go out to like front week options here, which expired just next week, the liquidity isn't bad. I mean, the open interest is much better than it used to be. I mean, when I was looking at LedgerX over a year ago, it was a crying shame, because you could see customers literally begging each other on their blog, on their version of the trading floor, like, hey, anybody want to buy my option out here? And it was somewhat comical. The other problem that I had was just due to the liquidity. If you go to like sell an option like this, before you were stuck with the spread. You could not negotiate this. Now you can change the limit price. You can actually say, well, I'm not going to accept $200. I feel that the spread is closer to the middle. Now I'm going to put in $225 and see if somebody will take that. Okay. Now there's no guarantee that just because you split the difference between the bid and the ask that you're going to get filled at that, but at least you can try, right? This is always the case with options, that there's a secondary market there. So just like with the stock market, there's a bid and an ask for the underlying instrument. There's also a bid and ask for these individual options, and you need to work that as hard as you can. The other thing behind this is that these are physically settled contracts, and from what I can understand, there is no early exercise. So you can allow them to go in the money. You don't have to panic about put the asset overnight or anything like that just because it's in the money. But you know that at the end of the day, if you do get exercised, it's not going to go for naught. It's not going to be cash settled on you. So yeah, you may be, if you sell the 6,000 put, and if April 3rd, the price is down at 5,500, guess what? You're underwater on the trade, but at least you get the physical asset that you can work with. That is what you're committing to. The other thing I think is interesting is that you fund this account, basically you fund it with USD. So that makes it fairly simple, again, for people that can open up an account, is just funding it with USD. So you're not funding it with some currency which is going to go flying all over the place. It's going to be, within the realm of believability these days, it's going to be relatively stable compared to other assets. Because what you're going to do is you're going to sell and sell and sell and sell until you do get assigned Bitcoin, and then boom, you're going to have a cash balance and you're going to have a BTC balance. And then you get to sell puts against that. The other thing that I think is great is that the contract size is now 1/100th of one Bitcoin. So 0.01 Bitcoin, which is great. This is great for small accounts. And right now the notional value of that would be about $60. Somebody with a small account can realistically trade these mini options for Bitcoin. Now, what I don't know is whether or not this company is going to be around in a week or whether they're going to be acquired by somebody. That is what I would expect. I would expect them to be acquired by some larger group that's just going to come along and just grab them, pluck them out of the water, and just bolt them on to their interface for their expertise in how to trade this. Because right now, the larger U.S. brokers are just not that interested in it. So they may be able to operate independently for maybe another year or so. And I have not heard any problems about any kind of security issues or any loss of, believe me, if you're able to run a broker/exchange in the U.S., you've been pretty well vetted to be able to be a good custodian, good guardian of people's funds. Okay, guys, so that's kind of it. That's my point for today is that, number one, we're going to be in a trader's market for quite some time. I don't know when cryptocurrencies are going to be able to escape this gravitational orbit of the larger markets and be able to trade and decouple. That may happen sooner than we think, but for right now, it's still going to be under the weight of just this gravity of the larger markets undergoing some just torturous moves right now. So until that decouples, we're in a trader's market. You can trade that through futures. You can certainly do it through spot as well, too. Nobody's saying that spot doesn't work with this. It's just not as efficient. And then certainly options are my preference in trading a choppy market like this, because who knows what you're going to get within the next week or so. And options allow you to be wrong and still win. And options provides that business model where you can't do that. If your only mode is to buy things and not to sell instead, you lose out on those percentages and those probabilities. All right, folks, that is it for this weekend's report. Thanks for listening. We'll see you around online. Take care.